Good morning, everyone. I'm Trevor Owens, managing partner of the Bitcoin Frontier Fund, and I could not be more excited to welcome you today to our official Cohort 3 Demo Day. Bitcoin Frontier Fund is an operational investor. That means we work hands-on with all of the companies that you're about to see today and all the companies in our portfolio. And we invest in Web3 companies and founders building new use cases for Bitcoin. We started in 2021 at Stacks Ventures as one of the few VCs with a Web3 thesis on Bitcoin. This is now our third cohort and also marks our rebrand to the Bitcoin Frontier Fund. Across these three cohorts, we've invested in 51 early stage companies, making us the most active VC investor in the broader Bitcoin ecosystem today. So here's a highlight of some of our portfolio companies that you may have heard of. We are often the first check in the startups we invest in, and the mean raise within 6 months of our demo day is 1.1 million with an average IRR of 4.7x in the next round. And so here's what we invest in. We're really focused on infrastructure. Despite being older, Bitcoin is still much earlier than other ecosystems when it comes to Web3. And so many of our investments focus on low-hanging fruit. Enabling technologies, proven Web3 use cases. We have the fortune of learning from what's already working in the market, then building it in a better Bitcoin native way. Developer tools, meaning APIs, SDKs, hosted services, and anything that helps developers get to market faster. Accessibility, meaning wallets, on-ramps, off-ramps, exchanges, and bridges that make Bitcoin more accessible. And finally, DeFi and Bitcoin, which we're super bullish on. We think is going to be a huge market in the future. And so thanks to Ordinals, there's now a renewed drive to invest in many previously ignored technologies on Bitcoin. Ordinals, inscriptions, and BRC20, which of course leverage SegWit, technology introduced in 2017. We also look at counterparty and protocols that learn from it, discrete log contracts and PSBTs, also technology introduced in the same time as SegWit, but honestly ignored until now. And so we also invest in startups building on Bitcoin scaling layers such as Lightning, of course, Stacks, Rootstock. We're very interested in ZK rollups and how that's going to play out in the future on Bitcoin and multi-chain Bitcoin infrastructure. So I've told you what we invest in, but let me explain a little bit our thesis for how we see Bitcoin reaching mass adoption. Of course, there's always the question, is Bitcoin digital gold? Is it internet cash? Or is it the settlement layer of all of Web3? First of all, we don't think that Bitcoin has a scaling problem. We think actually the entire space has a demand problem. We're still figuring out exactly what this new disruptive technology can do. And so there's a few principles we believe in. The first one, lions and gazelle, and the second one, the toothbrush test. So if we believe that Bitcoin is money, what that means is that it's a two-sided market. People who want to pay with it and people who want to receive it, receive it. One side is the lions, one side is the gazelle. And so we fundamentally believe that for Bitcoin to become the new global digital currency, we need people to store as much wealth as possible on Bitcoin because we see the people who want to pay with Bitcoin as being the gazelle in the savannah. That's going to make it easy to unlock the merchants and other people who want to receive it. Secondly, the toothbrush test. This was a term coined by Larry Page, founder of Google, who said that products which are used more than 2 times per day have a much higher chance of reaching mass adoption. And so as we know right now, people right now, they're storing their wealth in Bitcoin as digital gold, but they're not using it very much. I think with Ordinals, we've seen that people are finally creating a digital first economy, paying for things in Bitcoin. Right now for a toy use case, of course, which is the JPEGs and profile pictures. But we're taking a very long-term view on the space. And we think that every single new use case coming in the future is going to give people another reason to use Bitcoin, maybe one time per month, maybe a few more times per month. But if our fund can invest in 30 companies over the coming years that give people a reason to use Bitcoin one time more per day, then we're halfway to passing the toothbrush test and reaching mass adoption. And so today you're going to see some amazing companies who've been working really hard over the past few months. I'm super excited for you to see what they have in store. This is going to be the order. And so we're about to kick it off here. Teams, I hope you're ready. We'll kick it off with Liquidium. Robin, are you ready?
Thanks, Trevor. GM everyone, I'm Robin, the CEO and co-founder of Liquidium, and we're defining the future by using ordinals as collateral for native and trustless Bitcoin loans. Speaking of ordinals, they made Bitcoin sexy again, and there is no wonder why it's a billion-dollar market with massive growth potential. It's the fastest growing asset in crypto right now. We crossed 10 million inscriptions already, and big players like Bugatti, Yuga Labs, Magic Eden, and even Binance are joining the space now. There are a lot of ordinal collections that are worth a fortune. For example, every Bitcoin Rock ordinal has a value of over $200,000 because they are super rare. But ordinals are not liquid. It's inaccessible, locked value unless they are sold. Still, most holders don't want to sell, so they run out of liquidity. Use Trevor, for example. He has a legendary on-chain monkey, and he would never sell. But from time to time, he needs liquidity to buy new stuff. On Ethereum, we have platforms like NFTFi and Arcade, where people borrow against NFTs. But on Bitcoin, it's missing. Until now. Liquidium enables borrowing and lending Bitcoin using ordinals as collateral. It's the first lending solution on Layer 1 Bitcoin enabled by PSBTs and DLCs. This is the first non-custodial DeFi solution for ordinals, unlocking millions of dollars in locked liquidity. Borrowing is as easy as selecting an ordinal and setting the loan terms. Lenders instantly see the request to lend Bitcoin to the borrower. We're demonstrating how easy and intuitive lending on Bitcoin can be. This concept is already proven on other chains like Ethereum. In fact, NFT lending is huge. It's about to reach $2 billion in borrow volume, and the biggest NFT companies like Blur are now starting to do NFT lending too, because it has so much demand. We're refining NFT lending by bringing ordinals and lending together on Bitcoin, the biggest and most trusted blockchain in the world. This is how we make money. We take a cut of 20% of the generated interest on every loan. This also means that we're incentivized by repaid loans, meaning we create a platform where loans are safe. Liquidium is not just the only lending platform that supports native ordinals, but it's also the first non-custodial lending protocol on entire Bitcoin. We offer similar features as our competitors, like bundled loans and soon instant loans, but we're not just bringing a concept from Ethereum to Bitcoin. No, we're actually solving the biggest pain of peer-to-peer platforms. We reduce the time to match borrower and lender by over 90% using a custom AI algorithm. We're backed by the smartest investors in the space. Our MVP had over $20,000 of borrow volume. And here's the kicker. Over 15,000 people signed up to use Liquidium in under 24 hours. Back in December of last year, we built the first NFT lending protocol on Stacks. We got a lot of feedback from our users there, which we're applying to our new ordinal lending protocol. The closed beta for our ordinal lending protocol will be live in the next couple of days. We aim to launch publicly at the end of next month. On our roadmap, there are some exciting features, which include AI matching, BRC20 support, liquidity pools for instant loans, and cross-chain functionality to use assets from other chains as collateral. We're a team of young and skilled founders with individual strengths. I'm Robin, the CEO, and I have a background in design and management. I also led a sold-out NFT collection. Alongside me, our CTO Pete, a computer science genius who developed the crypto integration for the PNC Bank. Leo is our creative officer and has a strong background in design and illustration, and Julian is our CMO, and he has remarkable skills in management and marketing. Advising us are top-tier people like Jacob, a Forbes 30 awardee with multiple exits, Kevin, a crypto investment whiz, and Dr. John Ennis, a seasoned founder with a successful exit track record and a PhD in mathematics. We're raising and we're building the leading ordinal lending solution. Now we invite you to Liquidium's ordinal DeFi era, and we'll take over NFTs together. Thank you.
Thank you, Robin from Liquidium. Next up, is Deeplake. Abdel, take it away.
Hello, my name is Abdel, and I'm the co-founder and CEO of Deeplake Finance. You must know by now, the Bitcoin revolution has already begun, and developers are pouring in to build on top of ordinals, discovering underutilized tools of the Bitcoin ecosystem. Now, thanks to PSBTs, Bitcoin has already achieved more than 417 million in ordinal trading just in the last 4 months, and is about to flip Ethereum and surpassing every other blockchain. PSBTs, or partially signed Bitcoin transactions, unlocked Bitcoin native ordinal marketplaces, something no one thought was possible. Funny enough, it all started in 2017. This is the year SegWit enabled people to start storing data on Bitcoin transactions. And you know what else happened in 2017? PSBTs. These are the things that trustlessly swap between ordinals and Bitcoin today. But what about DeFi? Inscription and PSBTs alone do not offer the functionality to develop a robust DeFi ecosystem. There is one more tech that happened in 2017, and it is just getting its time. It's DLCs, or discrete log contracts, which allow building trustless escrows on top of Bitcoin. And it is the key to unlock the Bitcoin DeFi revolution. Like PSBTs, for a long time, DLCs have had very little demand to utilize them. Until today, DLCs unlock billions of dollars of value through a new wave of native Bitcoin DeFi applications. But you know, DLCs are very hard to work with and have many gotchas for developers. Considering the incredible demand to build robust DeFi on top of them, or on top of Bitcoin, developers need a secure and solid foundation on which they can build their native applications. With a simple script, developers today can enable their applications to use the full power of DLCs, leveraging native Bitcoin in a non-custodial and trust-minimized way. Deeplake enables protocols to draw upon users' Bitcoin liquidity without the fragility of smart contracts or the cumbersome of peg-in and peg-out processes, exploiting the raw power of non-custodial DLC vaults to provide our customers with a solution to lock their Bitcoin with very minimal risk. This allows developers, for example, to craft their own unique tokenomics, tailored to their user base, and create a one-to-one Bitcoin stablecoin, or build innovative products to stay liquid while hodling Bitcoin through native Bitcoin loans that are backed by ordinals, all the while eliminating the need for a trusted custodian with a custody-free solution, and retaining the freedom to remove liquidity anytime they want for the small cost of a Bitcoin transaction. Liquidium are the first to do it, and they are already killing it. We help them get to market in weeks instead of several months. In fact, this is our biggest differentiator. Where others are building use cases on top of DLCs, we are first mover with a simple developer infrastructure that is agnostic to which business case our customers would like to build using the raw power of DLCs. And we have already started testing with a handful of partners, including a simple use case for atomic swaps from Bitcoin to stacks, a mining use case for distributing Bitcoin block rewards using ordinals, and a peer-to-peer native Bitcoin lending protocol that is backed by ordinals. These guys are on a freemium model that will start generating fees once they hit a certain transaction volume, after which they will start being charged a 2% transaction fee for every DLC that is locked. This seemingly small amount adds up very quickly, as we have already shown the huge market size. Using Ethereum as proxy, DeFi on Bitcoin is at least $50 billion in the next year and a half, and it is expected to grow 3 times more than that in the next 5 years. And yes, we are the best team positioned to solve this challenge. Thanks to our track record of success building fintech and related products, we demonstrated our ability to tackle complex technical challenges related to Bitcoin and simplify them. For instance, in the last decade, I bootstrapped 2 companies to profitability and exited a third. Then here, built the first NFT marketplace on Stacks. Amin headed finance operations for North and West Africa and the MENA region for Nestle for over 6 years. And Nick previously built the whole marketing front of Mimo Capital stablecoin. This is why we are looking for investors to get 7 new Liquidiums to market by the end of this year. Thank you.
Nice work, Abdel from Deeplake. Next up.
Hey everyone.
Or
Thank you,
take it
Trevor.
away. Anatoly, go ahead.
Hey everyone, my name is Anatoly. I'm co-founder and CEO at Force Prime. We're building a seamless onboarding and asset management toolkit for Web3 games. Every 20 years, there is a major paradigm shift in the gaming industry. Started in the 80s with PC and console, it switched to mobile 20 years ago with free-to-play revolution. And today, we see the next revolution, Web3 and blockchain. And when I say today, I mean that it's happening right now, because blockchain gaming is about to pass mobile gaming in VC investment. But at the same time, still from 3 billion active gamers, still less than 1% are on the Web3. So upside is crazy, but what's the problem? The terrible user experience. Up to 80% of players drop off when they ask to connect a wallet. That's crazy. So game developers have to provide seamless experience to their users, like Reddit did with their collectible avatars collection. They onboarded 2 million non-Web3 users just by making blockchain invisible. That's why we're building Force Prime now, Web2 wallet experience for Web3 games. Because billions of gamers will be onboarded to Web3, the in-game wallets. Imagine that your favorite game decided to launch on Bitcoin. Using Force Prime, anyone can create their account using email only. And right after that, they will be able to receive, store, trade any assets without any time delays or gas fees, and without having any idea about how the whole blockchain stuff behind that works. Sounds simple, but for game developers, that's even easier. Force Prime API is as simple as literally 6 lines of code to start using Force Prime authorization. That makes it 30 times faster than building this solution on your own. And we have super game developers friendly and flexible business model. We do not charge you while you're building your game or testing it in a soft launch. And we start charging you only after you're doing some money, as low as 1 cent per monthly active user. And we also charge 0.5% from any payment in crypto that was made using Force Prime SDK. Web3 market is at a great point right now. It's like free-to-play games 20 years ago. With 37 million active gamers last year, market is growing at crazy speed and will become $100 billion industry just in 5 years. We have some competition, but for gaming SDKs like Morales or Immutable, Force Prime provide a real seamless experience, Web2 experience for players. And for authorization toolkits like Magic Link or Ampere, Force Prime Toolkit is tailored for the specific needs of game developers, and Force Prime is the only BTC-friendly solution. In less than 3 months, we're already live with first game, we support Ordinals BRC20, and we have fast revenue. And for our client's game, we were able to increase conversion rate on onboarding 4 times, from 21% to 82%. Pretty soon we'll add mobile support, some additional game mechanics and advanced API to make it even faster to build games. As a team, we have more than 10 years of joint work in the gaming industry with multiple games and tens of millions of players. And we have 2 exits. So, if you really want to lead the greatest migration in the game industry, let's have a chat. Thank you.
Thank you, Anatoly from Force Prime. Next up is BitFlow. Take it away, Dylan.
Hey everyone, it's great to be here. I'm Dylan, the CEO of BitFlow Finance. We're building a decentralized exchange on Bitcoin and Bitcoin layers to help DeFi users trade and earn with liquidity across the entire Bitcoin ecosystem. More and more capital is flowing into Bitcoin and Bitcoin layers, but this new liquidity, it's fractured, and it sits in isolated pools. So when you try to swap between these assets, it's at best expensive, but most of the time it's not even possible. On Ethereum, it's pretty easy to trade your wrapped Bitcoin for any stablecoin that you want. But in the Bitcoin ecosystem, not so much. And that is where BitFlow comes in. We built stable swap plumbing that makes it easy for Bitcoin liquidity to flow. The two most liquid types of assets are stablecoins and Bitcoin, and we need capital efficient ways to switch between these assets that represent the same thing. With this infrastructure, we're not just connecting two tokens. We're connecting communities, projects, and economies that would otherwise remain isolated. BitFlow offers way more flexibility so that you can trade between all tokens defined on Bitcoin layers. And the result is that we get a well-oiled Bitcoin DeFi protocol that's capable of generating a sustainable Bitcoin yield without the risk of impermanent loss, thanks to the stable swap infrastructure, which optimizes for deep liquidity, low slippage, and low fees. All of the billion-dollar protocols on Ethereum rely on stable swaps. Curve Finance, which actually started off solving the same problem on Ethereum, just flipped Uniswap as the #1 DEX with over $1 billion in daily trading volume. You can think about BitFlow as a better version of Curve or Uniswap, except built on decentralized Bitcoin rails. Building the AMM functionality on stacks will mean that transactions benefit from 100% of Bitcoin finality. And what's really powerful is the way that we provide users with a native Bitcoin experience by combining these atomic swaps with AMM functionality. During the DeFi summer of 2020, a lot of these protocols that you see here on the right took off like a rocket. But this summer is different. 2023 is the Bitcoin DeFi summer, and we're seeing even more explosive growth. The users who are trading BRC20s need a way to lock in their gains by swapping into either stablecoins or Bitcoin. None of our competitors can enable that. We make money by charging a fee on all swaps, but our rates are so good compared to the alternatives on Bitcoin that we already have over 1,000 people signed up on our wait list. The more trades that happen, the more yield is created, which brings in more liquidity providers and more traders and more liquidity providers and more traders, and you get this wonderful flywheel around Bitcoin. I am really proud of what my team has accomplished so far, and I'm happy to share that our smart contracts have been audited. We're already live on mainnet, and we've secured an initial $550,000 commitment from liquidity providers who really need our product. But this is just the beginning. We're already back to building, and work is underway on a non-custodial bridge to connect liquidity between rootstock and stacks. We're bringing together Bitcoin layers and pushing the boundaries of what's possible with native Bitcoin. To tell you more about my team, I have 7 years of experience as a software engineer working on distributed systems. My academic background is industrial engineering with a focus on economic and financial systems, as well as a master's degree in computer science from Georgia Tech, where I decided to double down on building on Bitcoin. I believe it's our best chance to have separation of money and state, and the best way that I can contribute is to build a protocol like BitFlow that helps grow the whole Bitcoin economy. My co-founder Diego is awesome. He's a marketing and operations genius with over a decade of experience managing teams and strategy for clients across the globe. And just last month, he hosted a sold-out Ordinals conference in Miami. What a guy. We're grateful to have such a strong group of advisors who are committed to supporting this protocol's growth over the coming years. And we've already onboarded full-stack Web3 developers with incredibly valuable experience in atomic swaps, partially signed Bitcoin transactions, BRC20s, Ordinals, Clarity smart contracts, EVM, and more. I'd love to see people coming back to build on Bitcoin, but we never left. We're raising. We can take advantage of the head start that we've already built, so we can expand our team and move quickly to reach a critical mass for this protocol. So join us on this journey to unleash Bitcoin DeFi, and then sit back, relax, and watch the Bitcoin yield flow in.
Thank you, Dylan from BitFlow. Next up, the Bitcoin Startup Lab. Take it away, Albert.
Gio, I'm Albert, CEO of Bitcoin Startup Lab, and right now we're living through a historical time where there's a record number of users and founders onboarding Bitcoin. Today, I'm here to share with everyone how we position ourselves to ride this emerging Bitcoin trend and take along the best investors with us. We know Ethereum put Web3 on the map with DeFi, then the ICO craze, and then the NFT boom. It took almost 5 years for these market forces to work together, but in only 5 months, we saw ordinals, then BRC20, and the beginnings of Bitcoin DeFi disrupt the market and unlock opportunities that we never thought were possible. Now, there are hundreds of startup companies building infrastructure on Bitcoin where there was none months ago. During this time of incredible innovation, we believe it is the best time to find the next unicorn companies. If you're in the game, you can also enjoy market returns that exceed the market. But hold on. With this massive influx of founders onboarding Bitcoin, it makes it harder and more time-consuming for you, the investor, to find the best opportunities. And to make matters worse, when we invest at pre-seed stage, we expose ourselves, sure, to higher returns, but also to higher risk. For example, how do you know the founder has champion DNA? Is their team strong enough? Do they know how to iterate to product market fit? Do they have a winning Web3 business model? Well, that's where the Bitcoin Startup Lab steps in. We recruit founders with champion DNA. Then we supercharge them by helping them build strong teams through co-founder matching, training them in the science of product market fit, helping them engineer robust, winning Web3 business models. And after they get through our 12-week program that we call the Gauntlet, we're left with the best of the best. Yes, we created a situation where it's low risk, high return. But yeah, most people ask us, isn't it hard, really hard, to train startup founders from the very beginning? Well, not for us. Over a year ago, we ran 21 cohorts in China, making us the most prolific pre-accelerator in one of the most competitive startup environments in the world. This allowed us to hone our abilities to select champion founders and also allowed us to develop the skills and tools to train them to build investment-ready startups. And a year ago, before even Web3 investors want to invest anything on Bitcoin, we did a pilot run. Out of 600% of our applicants, we selected 25 to train. That makes our acceptance rate 3.7%, making us more competitive than Harvard at 4%. But more importantly, the 4-star teams I just heard pitch right now, they graduated from our program, and 3 out of 4 of them found co-founders through our program. Now that's value add. And now we're on pace to train 50 more teams this summer, another 100 teams this winter, and then 200 more teams by spring at the next Bitcoin halving of next year. So you're wondering, where are we getting all this talent? Well, as I mentioned, we got in early last year. So when ordinals hit, we're ready. Just a few weeks later, we announced the Bitcoin Olympics Hackathon. And when it launched in April, it became the biggest Bitcoin hackathon of the year. Not to mention, it was the first ever ordinals hackathon globally. And here's another part of our success. Our vision is to accelerate the advent of the Bitcoin economy. So we work with the top ecosystems, ordinals, Lightning, Rootstock, Stacks, and more. Then we apply everything social media so we can maximize our deal flow of talented founders. Hell, even people jumping ship from Ethereum, Polygon, and Solana and more are coming to us to build on Bitcoin. Why? Well, we're first to market, and currently we are the only pre-accelerator that focuses all in on Bitcoin. And 79% find co-founders through our program. For our transformative 12-week program, we're rewarded 1.8% equity and tokens, and then another 1.5% for helping them find co-founders. Let me emphasize, I wouldn't be able to do this without my amazing team. We're able to train founders starting from the idea stage because we're serial entrepreneurs ourselves. And we worked hard to develop a very big lead in brand awareness and working with the top Bitcoin ecosystem players. Also, 1 year ago, we only had one leading Bitcoin technology in our program. Now we have an array of 10 of the leading Bitcoin technologies. We believe this is super important if we are to reach the highest pinnacles of innovation on Bitcoin. This is why we're confident that we can produce the best startup teams building on Bitcoin. And I'm thrilled to announce we have over 70 are the top entrepreneurs building on Bitcoin now as our mentors. And thanks to them, we're to raise 2 years runway from capital. And now, because of this massive influx of founders onboarding Bitcoin, we're opening up our next round. We believe this summer is the best time to invest in Bitcoin. But with all new founders coming to Bitcoin, you need a program like ours to put them through the gauntlet and find the best unicorn opportunities. So if you're like us and you're convinced that the future will be built on Bitcoin, we'd love to meet you. I'm Albert, CEO of the Bitcoin Startup Lab. Thank you.
Thank you, Albert from the Bitcoin Startup Lab. Next up, is NFT Bridges. Take it away, Elon.
Hi, everybody. My name is Elon Klein. I'm the CEO and co-founder of NFT Bridges. We're building a set of bridges that allows collectors to move their NFTs cross-chain. So why now? In one word, ordinals. Ordinals came to the market in February, and more than 10 million of them were inscribed, bringing a new wave of collectors, collections, and activity into the market and sucking a lot of liquidity out of Ethereum. It's a great time to have a bridge for NFTs between Ethereum and Bitcoin. But we actually started building our bridge long before that. We noticed that DeFi moves $82 billion a year worth of token between chains by bridging. But the value of NFTs being bridged is less than $1 billion a year, even though the market cap for both and Ethereum is very similar. And you might say, why would I care where my NFT is? And to that, I just say, the gods. The gods were a very successful collection on Solana. The floor price was about $11,000 per NFT. Frank, the head god, figured out where the market was going. He bridged the collection to Ethereum, Polygon, on Bitcoin. 2 months later, the floor price flew to $19,000. He injected almost $78 million into the collection by using the bridge, tapping into new liquidity pools, new collectors on other chains. Frank did it by getting a $4 million grant from Polygon. All collections are going to want to do that. And that's where we come in. NFT Bridges can build those bridges at a fraction of the price the gods did. Our infrastructure will enable collections to move NFTs from chain to chain, tap into those liquidity pools, tap into those collector pools, and inject this into their collections, growing the market for everyone. A bridge lets you transfer your NFT across chains in 5 clicks, lets you see your transactions and your NFT in simple-to-use galleries. It's simple and elegant. And in a world where NFTs from the same collection are going to be across many chains and moving frequently, you also need to know which is the right active NFT. For that, we invented the Bridge Monitor. The Bridge Monitor looks at transaction data, wallet data, and 12 additional blockchain data points and verify that this specific NFT is the right NFT from the original collection, however many times it went between chains, and that it is safe to buy. The Bridge Monitor would become the source of truth for the NFT market. With an extensive test on Stack Testnet, we successfully moved more than 2,200 NFTs from 2 collections. We already built 2 bridges, one from Ethereum to Bitcoin, one from Ethereum to Stacks. Both of them are on mainnet. We make money in 3 different ways. We get 2.5% every time somebody mints an NFT through the bridge. We also get a fee every time somebody just moves an NFT, regardless if they sell it or not. And we offer a subscription model. In 2022, NFTs were a $22 billion market. All estimates say by 2026, they're going to be at least $136 billion. It's a big opportunity, and it is growing. We are unpicking those NFTs stuck in Ethereum, transferring them and the value they represent to other chains. NFT Bridges is going to win this sector. It is the only bridging company that offers an ordinal bridge, a multi-chain minting mechanism that allows collection to mint cross-chain on day one, and a one-to-many sales platform that allows collector to offer NFT for sale on multiple markets. This innovation will help us grab market share quickly. And we're excited to be building these industry-changing features. Like I mentioned, a non-custodial ordinal bridge, a multi-chain minting mechanism, and a one-to-many sales platform for collectors. We already have more than 20 collections on our waiting list, representing more than 60,000 NFTs available to transfer. We already built 2 bridges, and we'll build 12 additional bridges in 12 months. and partner with chains and native NFT markets to support the bridge protocol. We have the best team for this project. I already launched an NFT collection on a smaller chain and experienced a lack of liquidity. I built the bridge because I knew firsthand that this is a problem worth solving. My co-founder, Micha, is the person with the most Emmys you ever met in your life. We work with some of the biggest global brands and we bring them to the bridge when they need to meet their NFTs cross-chain. Our developers, Jack and Danielle, are full-stack developers with cross-chain and blockchain security experience. We're raising a pre-seed round and have a lot of interest. We're looking for strategic investors to help us explode the NFT market. If you have an NFT, would like to move it to a chain that has better liquidity, come join us. Help us make NFT Bridges the most successful NFT bridge on Bitcoin. Thank you for your time, guys.
Thank you, Elon from NFT Bridges. Next up, last but not least, rounding out today's demo day, is Wrapped. Take it away, Ronak.
Hi, everyone. I'm Ronak Paksat, the co-founder and CEO of Wrap.com. We wrap Bitcoin on any chain. Bitcoin DeFi is growing at a rapid pace, and the global DeFi market is expected to be $230 billion by 2030. However, similar to early internet protocols, blockchain protocols aren't connected, and traversing blockchains is time-consuming and expensive. The current non-custodial bridges are either slow, vulnerable to hacks, with 3 billion hacked in 2022 alone, or don't work. And that's where Wrap comes in. Wrap 1.0 launched in partnership with Anchorage, a qualified custodian, by creating synthetic assets like XBTC and 10 others that allow users to connect their digital assets to DeFi faster and more cost-efficient. For instance, Wrap Bitcoin allows other networks, such as Stacks or Ethereum, to be leveraged to enable new applications and use cases for Bitcoin. It also allows dApps to leverage Bitcoin for decentralized lending, margin trading, and derivative markets. These wrapped assets are fully collateralized, operationally secure, fully financially transparent, one-on-one backed with on-chain proof of reserves. We took our learnings for Wrap 1.0 and realized the big opportunity is unlocking Bitcoin liquidity, and therefore launching Wrap 2.0 with seamless UX, self-serve APIs, and most importantly, adding cross-chain settlement functionalities. Our competition is both custodial and non-custodial bridges, and there's pros and cons for every solution. Wrap custodies assets with custodians that meet rigorous regulatory standards and audits that help protect client funds against loss, theft, or misuse, and hold client funds in segregated accounts. It bears repeating, all wrapped assets reserves are also verifiable on-chain, and most importantly, when we ask our users why wrap, they say it simply works. Since launch and while still in beta, Wrap has been able to gain rapid traction and sign 6 of the top L1s, generating $1.9 million in revenue to date. Wrap makes money by charging customers, investors such as traders, market makers, and builders such as dApps, wrapping and API fees depending on retail or institutional access. We charge 20 bps per trade, and depending on volume, anywhere from $1,000 to $20,000 for monthly API access plus applicable wrapping fees. And we're just getting started. In 5 years, we're aiming to have 10 billion TVL and $100 million annual run rate while being one of the default DeFi infra providers. We're expecting to see growth in this next phase by focusing on wrapping Bitcoin, the largest digital asset, with a $500 million market cap and an average $22 billion in daily volume. And if we capture even 1% of the market, Wrap will generate over $10 million in monthly revenue. And where the team accomplished this? Wrap was incubated at TokenStop, a leading enterprise platform that has launched digital assets with $18 billion market capital. Between Mason and I, we both have experience building and launching products at top financial institutions, and also powering digital asset launches such as Avalanche, The Graph, and others, with $1 billion raised so far. For this next phase of growth, we'll be focused on enhancing our user experience, automating and rolling out our self-serve APIs, launching cross-chain settlement functionalities, while aggressively signing up dApps, merchants, and market makers. We're already backed by some of the best in the industry and looking for additional to wrap up our seed round. Thanks for listening.
Thank you, Ronak from Wrapped. And that is a wrap, everybody. That is the 7 portfolio companies from Cohort 3. Great job to everybody who pitched today. We're going to open up the breakout rooms for the investors in the audience who want to take a minute to connect with the founders.